Hello everyone, my name is Marcello Kolax and today we're going to have a look at the markets for the week starting 29th of January 2024. So we start with the TTF as always and it seems like the bears are coming to an end, or at least they're taking a little bit of a breather, because on the weekly chart we can see that the entire week turned out to be a little bit of a doji pattern. So a doji simply means that we have two long wicks and a tiny sort of range of the market. So we kind of opened where we closed, and throughout the week the market tested for direction without a clear winner. So overall, there's no directional clarity with these patterns. It truly just means the market is thinking. Seeing that we had actually high volume on those means that the market was truly thinking it through. Overall, we are still bearish, so that is the key message here. So the midterm outlook remains bearish because Stochastic gave us a bearish signal, or still bearish, and the MACD is still pointing lower. So I do understand the people that I talk to, my clients, they are a little bit torn, but overall the idea is for the market to move lower until we have clear evidence that it has changed. So in the next couple of days, probably what I'll update is this here. So probably above or below the range of last week's, or let's say the weekly doji candle, that should usually give us a little bit of a direction. So a break below it, so a break below 26.5 would continue with the bears, and a move above 29.42 would give us a little bit of upside. Although even the upside is possibly just a corrective move higher. And when that happens, we then start drawing in, even on the weekly chart, maybe, so if we were to push higher, we could start drawing in FIB retracements. And the first hint of an upside correction would come, as I said, with a move above the doji. And then a 23.6% FIB then tells us, okay, we have a little bit of a shallow correction, 38.2. It's still a shallow correction, but not that much. And ultimately, it could go to 61.8%, which is 45.23. I don't see it happen right now with the evidence available to us. I believe that ultimately still going lower, but it is good to at least have an idea of what is going to happen at what point, right? So let's have a look at the daily chart. So because here we are already working with FIB retracements. So you can see this last week, yeah, Friday, Thursday, Wednesday, Tuesday, Monday. And we can see that overall we are still in the channel, which means we are, yes, the near term is bearish. There's no change here, but the market is currently thinking it through. And what you could see here is like this. It was last week, 2 weeks ago, just a period of indecision. Then this break above the 23.6, where the bulls then went, oh, now we could really go for it. And the idea is then possibly to take like one FIB at a time. But as you can see, we didn't even manage to close above the 23.6% FIB twice. And we immediately had this bearish harami candle pattern, which usually puts an end to any sort of upside. Yeah, okay, there isn't much of an uptrend to reverse for the bearish harami, I get that, but still the idea is the same. Any sort of upside attempt was immediately undone the next day. And ultimately, possibly below, where is this? 26.6, below 26.6, we would possibly see a downside continuation. All right, and on the 15-minute chart, we see, so once again, 15 minutes, we just see a little bit of Friday. We came off, and we are still pointing lower overall. So here also the idea is for the market to move lower on Monday morning. Of course, a lot can happen throughout the weekend, and opinions can change, but for now, it's a little bit of nothingness, to be completely honest. So let's have a look where we go on Monday morning. I don't expect anything else but a little bit of indecision before the bears continue. And you can see here last Friday we have these really long wicks. We're in the small body, which simply means that the bulls and the bears, it was a push and pull, trying to find a direction, but it really ended up nowhere. So anything between 26.6 and 28.6 is just noise. And that is all for the TTF. All right, what is Brent up to? So here we see that the midterm outlook hasn't changed at all. We are still within this triangle that has been moving price into an increasingly tighter range, and that's been around since the start of 2022. Here on the weekly chart, of course, one candle represents 1 week of trading. And for now, it looks as if we are moving a little bit deeper into the apex of the triangle. So you can see the swings are getting smaller and smaller. And overall, the idea is for the market to like come out with a direction, may it be up or down, and then usually a strong move is followed that. We can see last week we did see some really good gains, and for now the idea is to touch the upper triangle boundary, possibly in the 90 region. 90 because it's the upper end of the triangle and it is also a psychologically important level. So this will be quite interesting. I am keeping my eye out on the 90. Of course, we don't make any trading decisions on the weekly chart. Oh yeah, by the way, let's have a look at the tools. So here we see that, yeah, we are below the zero line on the MACD, but overall the idea is for the market to still push higher, making higher highs and higher lows. And you can see this low here is still higher than this low. So ultimately the idea is for the market to push higher. Then we see that the stochastic itself is moving into overbought or about to move into overbought territory. Here, just a word of warning, just because we move into overbought territory or oversold doesn't mean that the trend will end. It simply means that we are continuing into a direction. And what any sort of overbought, oversold oscillator is showing us is simply showing us if we are making new highs. And looking back at the last couple of months, we see that, yeah, we didn't really make any new highs, but now we are making new highs. So automatically we are moving into overbought territory. But it doesn't mean that the trend is about to end. It means you just get a trend going, right? So there's sometimes oscillators or stochastic RSI, CCI. They are well used and well loved by the industry, but very often very misunderstood. So just because we move into overbought territory, don't take it as a sell signal. Absolutely not. This would be ridiculous. Please don't do that. All right, we see that on the daily chart, we actually have moved above this channel, this descending channel that has reliably moved the price lower over the past couple of months, since October, even September, October last year. And we did have this range going on, but now we pushed higher with great confidence. And for now, the idea is to still go to like 84.75, which is the peak from up here. So the idea is for the market to push higher still. We are in overbought territory, but once again, this is not a trading signal, not at all. It is simply means that the market is moving up. We are pushing above zero in the MACD, so that means the bulls are more or less in charge. I want to have a look at 84.75. I'm not sure if I would, so if I'm completely out of the market, I'm not sure I would put on a new position now because this important resistance, yeah, could maybe move the price a little bit lower. But if I'm already long, probably I would sit it out. Okay, let's have a look at what might happen on Monday morning. So here we can see that, yeah, overall we are making higher highs and higher lows. We pushed above this range here as well last Friday. So the idea is for the market to overall it is bullish, but we have topped out. Okay, so here's what I like to do. Actually, I do like this kind of scenario very much. So we ended the last session with a good up leg, and now we are topping out. And now the idea is, this looks toppy. We did get a bearish signal on the stochastic, and we also did get a bearish, preliminary bearish signal on the MACD. So what is happening here? Well, what is happening is that we can draw in FIB retracements up until here. And now for Monday morning, my idea would be as long as we are within 0 and the 23.6% FIB, I would like to just stay neutral and not do anything at all. But once we are pushing below it, then the idea is for the market to move lower significantly, possibly until the 61.8% FIB, which in our case is 82.3 or something around that. So you can see, what do? I do nothing. I just wait it out. Below the 23.6% FIB, we'll probably make it until the 61.8. However, if we immediately move above the 83.84 or this peak here, then we could simply continue the uptrend higher. So this is actually like an ideal setup because I don't need to know what the market is going to do next. I'll simply take it as it comes. So if we do go below here, you could make it all the way here, and then we make another decision. Then we make a decision: are we going to bounce, or are we going to undo the whole up leg? Yeah. But if we move higher immediately, which is my idea ultimately, then we could simply continue the uptrend. And what that would mean for the daily chart is exactly this. So we do have the lower peak, we do have the long lower wick here already. So the idea is possibly, yeah, overall higher, but a little bit of faffing around on Monday morning. All right, in summary, Brent midterm neutral. We are moving into this tighter range. In the near term on the daily chart, the idea is still to move higher, but I want to see 84.74 break, 75 break. And now on Monday morning, we kind of wait this out and see if we first get a correction or if we move higher immediately. And now it's time for European carbon emission certificates. So we are still firmly bearish, although we have been working through a little bit of a correction. So on the weekly chart, it looks a little bit like this. So always zooming out for context, we know that a lot of European traders are eyeing the 100 level, which has been over the past couple of years the like a focus level, like a fair value seems to be established in the 100s. Now we have been moving lower, and the traders that I'm talking to, they see the target in the 50s or 60s. What happens right now is that a couple of weeks ago, the downtrend accelerated. So that means the bears are even more convinced than they were ever before because we are breaking even below this sustainable pace, and we are moving even lower. But you can see that on the weekly chart, essentially what we have here is a little bit of a doji. And a doji can be, or spinning top essentially, which can be interpreted in multiple ways. So some traders like to call this a fair balance of supply and demand. So that's why nothing is happening, or hesitation, or they're fighting it out. So here, whatever it is, neither the bulls nor the bears made any progress. But looking at the more longer tools like trend and momentum tools, the 8 and 12 exponential moving averages here, or the MACD going lower still, you can see that here we are still going lower very firmly. All of these are pointing towards more losses. And if the midterm is in a downtrend, of course, we don't trade in the midterm, that means we are looking for selling opportunities on the daily chart. And of course, we are looking for short selling opportunities in the peaks. And now the question is, have we reached one of these peaks already? Because we know that this here is the most recent down leg, and we have been correcting higher. And we are finding resistance at this old channel. I'm just zooming out a little bit for you to see it a little bit better. So we can see that this channel has been active for quite some time, and we broke below that. So the downtrend was accelerated. And this correction higher is completely normal, absolutely. But I'm wondering, is that it already? Is there any more coming for the bulls? Well, let's have a look at the evidence. We see that the stochastic is topping out, even though we haven't even reached overbought levels yet. So that's a point for the bears. Looking at the MACD, we see, yeah, we have flattened out a little bit, but overall we are still heading lower. Bearish are winning. And looking at the 8 and 12 exponential moving average, we also see that the bears are winning. Last Friday was a doji, so and the long wicks show that both sides were equally convinced, but nobody really made any gains. So what does that mean? Well, if we were at the start of this week were to break above the channel again, we could retrace higher to the 38.2% fib, 50%, 61.8% fib. I don't see that happening, but we are bearish, but a little bit neutral in the very near term. But overall, the idea is still for the market to move lower. We see that on the intraday chart, so the 15-minute chart, we zooming out, we see that we had this channel going on for quite some time, directing the intraday downtrend. We then had this falling wedge forming, which we knew would resolve to the upside eventually, which of course happened. The target was perfectly hit as well, and since then we have been correcting lower and then sideways. So intraday we are neutral, and I want to see the 62 and maybe this peak here, what is 65. I want to see this break, this range break. Maybe if you want to be a little bit more extreme, you can say that you want to see the 60, or what is this here? Yeah, 60 and 68, sorry, 66. You want to see this range resolve before we make any big calls. And now you're going, well, 60 to 66, that is an awfully wide range, absolutely. So it doesn't mean we can't profit from the smaller swings within it for the short term, but we are talking about the midterm here, yeah, in order to get a good sense of direction for the near and midterm. I kind of want to see the 60, 66 range resolve to see what's going to happen in the next couple of weeks, okay? But in the near term intraday, we can of course still capitalize very well on this range. But right now, with the information available to us as of last Friday, I kind of want to see at least a 62, 64 range resolve, because within this range, you're only losing. There isn't much of a movement here to be made. So at least wait for this range to be resolved in order before you start making any calls for the next couple of days or even intraday. And that is all for EUAs. Midterm bearish accelerated, near term bearish accelerated, but potential for correction higher, intraday neutral. All right, that is all.